How's it going, fellow traders? There you go. Now you guys can hear me. I was talking to myself for a couple minutes there. How are you? If you can hear me, press the Y button on your keyboard and just let me know that you can hear me okay. I'd appreciate it. And then we'll get things started. I was taking a look at the Wall Street Journal because we had some action yesterday. We had a nice drop in the markets. And I was curious to see what the Wall Street Journal was going to say this morning. So let's take a look, right? Stock slump in worst session of the year. Investors grow more anxious about the Fed. Keeping interest rates high to fight inflation. This all sounds very bearish to me, doesn't it? Yeah. It goes on to say U.S. stock indexes suffered their worst session of the year Tuesday, dragged down by a disappointing forecast from Home Depot and growing concerns that the Federal Reserve will keep interest rates higher for longer. So when I'm looking through this article, all I'm seeing is negative, 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 okay? Bearish, bearish, bearish all the way across. And the funny thing is that if the markets were heading upwards, okay, with strong momentum, the situation would be exactly the same, but the article would be different. The wording of the article would be different so that it would look bullish, okay? So, you know, regardless of what's happening in the market, they're always going to put a spin on it. The thing that we have to figure out is why the spin, okay? So going through the article, all I see is bearish, bearish, bearish. Hot economic data have made investors anxious about the trajectory of U.S. monetary policy, okay, negative. Has led investors to expect the Fed to continue raising interest rates, okay, negative. Then you look at the continuation of the article down here, and it continues, negative, 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 negative. Now, here's the interesting thing, okay, because when we take a look at the markets, the actual S&P, and we look at what is actually taking place with price action, you remember what we were talking about yesterday, okay? We saw the decline in price, and what was it that I mentioned yesterday? I said, watch for this move when price hits the 4K mark, okay? I said that yesterday. Watch when price hits the 4K mark, because what I'm expecting to see is price start having bullish pressure here. Why bullish pressure? Well, you see this area here? This is an institutional buying area, okay? This is where the institutions were buying. Why do I think this? Because we had a massive trend line coming down here, okay? This was not too long ago, a few weeks back, where price was coming up against this trend line. We were talking about it. I was making posts about it. And so when price was contacting this descending trend line on the weekly chart, retail traders were coming in and they were selling, all right? Right here. And the media was selling this bearish bias. Okay, so it was in line with the descending trend line, with the media bias. Retail traders came in, they started selling at that trend line, all right? So who do you think has the power to come in to the market and push through all that selling to get price up here, okay? It's certainly not us, okay? And all that buying originated from this area here. So price rallied up, dropped back down, and now we're back at that same spot again. This is why I'm saying buying is what we are expecting right now, okay? Buying. Why? Because it happened in this area before. And what typically happens when price comes down to areas where the institutions were just recently buying is we start to see bullish pressure build again. Okay, so it's interesting how we had a significant decline yesterday, right into an area where previously the big institutions, the whales, whatever you want to call them, were buying. So historically, what tends to happen is buying. And this is as the media is coming out and selling this whole bearish idea about the markets. Okay, again, when you look at the article, they're telling you what retail traders are thinking, right? Investors grow more anxious. They know exactly what everybody's thinking. So they just put it out there. Hey, investors, what are you thinking? And a million of them respond to them and say, this is what we're thinking. And then they just write it in the newspaper. Well, we researched and polled a million investors, and this is what they're thinking right now. They're anxious. Okay. Somehow they're tapped into the consciousness of investors. Well, they're not. Okay, but they want you to read this and they want you to feel like you should be anxious as well. So as price is dropping down, we're contacting an area of buying. Okay. Another reason why they said what sparked this drop was Home Depot coming out with earnings. Okay. And their forecast. The home improvement retailer warned its profits will fall this year as it invests an additional $1 billion in wage increases for its hourly employees. Well, that's wonderful. So, what's going to happen now when they increase the wages, right? They're going to spend $1 billion, but guess what? They're going to eventually have to put the costs of their products higher, okay, to cover this, increases, because they're not going to dish this out of their pocket just for the kindness of their heart. So this is how we get inflation, folks. Everybody thinks, oh, it's a great idea to increase minimum wage. No, it's not. It's not a great idea to increase minimum wage. I know you're thinking like, oh, yeah, but then they get more money. Yeah, but then restaurants, retail outlets, everything goes up in price. Okay, so when those people getting minimum wage are getting a little bit more, guess what? When they go to a restaurant, it costs them more. When they buy groceries, it costs them more. When they go buy clothes, it costs them more. So they're really not getting more money. You understand? They're really not getting more money. It's everybody pays. The people that are working off of minimum wage, they have to pay more, and everybody else, the blue collar workers, white collar workers, are all paying more. So here's the interesting thing. So we're told that Home Depot is dropping. And this is a sign that the consumer discretionary sector is going to be dropping, or is dropping, because of this being hurt. But here's the interesting thing here, because we also follow the sectors, okay? We follow the sectors very closely, and we track what is happening, all right? And I'll bring your attention to something here. If you take a look here, we have this red rectangle drawn here. Why did I draw this red rectangle? Because this was an area that we located as an area where the institutions would be selling. Okay, this is a selling area. So the banks were buying up the sector from here, 126, all the way up to 157. Look what happened when price contacted this area here. You see what happened there? You see that little wick? Okay. This is institutional selling pressure coming in. Okay. Price rallied, selling pressure, basing, and now look what's happening. A drop. Okay. So the selling took place before the earnings came out. Isn't that interesting? The selling took place before the earnings came out. So it's not that the earnings are driving the sector. It's the investments, okay, or the selling, the distribution of positions that are fueling the moves in the markets. All right? Just wanted to bring that to your attention. Now the thing is that when we look at the consumer discretionary sector, we have institutional buying that's also taking place, okay? Like I mentioned, from down these lows, 127, we had buying. Now we have profit taking and potentially some selling taking place, okay? Adding short positions, which is causing this pressure to the downside. So I'm watching now on the daily chart. There's a couple areas that I'm watching to see if the institutions are going to come back in with buying, okay? Because if they were, I'm watching this area and I'm watching this area, okay? Watching to see if we're going to get some reversals from these areas here, like this. It could be either that one or that one. Because the longer term direction, the longer term forecast that we have is that this is going to go higher. All right. It's just a matter of how much time has to pass before the buying comes back into the market. But longer term outlook is that we are seeing that this is going to be going higher. Okay. Let's look at gold. All right. So gold, a lot of people asking me about gold. Hey, Kev, what's going on with gold? It's not really doing anything. Right. It isn't doing anything. Okay. That's the point. It's not doing anything. And it hasn't been doing anything for quite some time. You know, the last significant chart that we were watching was the monthly chart. And what we observed was an institutional selling area being removed, which was good because if price was going to go lower, they would have likely used this area to drop price. But they didn't. So that leads us to suspect that we're likely going to see price head higher. Okay? Hit the like button for me if you get a chance. Just go over to the like button and hit it for me. See, we only got 11 likes. I'd like to see over 30 if you guys don't mind. All right? So supply was not used to drop price. Instead, it was removed, and now we have new demand down here. So with this demand area, if price was going to go higher, we'd have to see price come down to this area here, okay? That's what likely would happen. Now, is it possible that we just see a reversal from here? Yeah, it's possible. Anything is possible, but it's not likely, all right? Because for there to be strength in the market, there has to be buying, right? And the last area of buying that we know for a fact exists is right down here, okay? So we trade based on what we know for a fact exists. We don't trade based on what we believe might take place without having any proof. We have proof that there's significant buying down here between the 1614s and 1692s. All right, so if there's going to be a push to the upside, it's likely going to happen from this area here, okay? So take a look. You know, trends are so important in the market. If there aren't any trends, then there's no momentum. The market right now, this gold market, has no trend right now on the monthly chart. So there's no momentum on the higher time frame. That's a problem, okay? When we look at the extreme high time frames, 6 month and 12 months, yeah, we do have trends. We do have upward trends, which is telling us that likely we're going to see gold go higher, okay? But, you know, in the meantime, we're just posting sideways on the monthly chart, okay? Now, on the weekly chart, we also located this area here, this buying area between 1810s and 1765. And as you can see, price is just dropping, okay? You see the bearish engulf here? It's just dropping. When you get a bearish engulf, we typically see price drop towards opposing zones, which is down here, which is why I gave the forecast of price dropping to the 1810s, okay? So we're falling short of that. We're just basing. We're likely going to see a push to the downside to contact that area, okay? And then we'll be watching that area to see, hey, if the bank's are they going to start accumulating a position there? All right. And, you know, lately we haven't had the CFTC data. So we haven't had that to see what the banks are actually doing with their positions, because the last few weeks they haven't released any data. They've been telling us that they've had issues with their systems collecting the data. But apparently this coming Friday, they're going to start releasing some of that data. And I think this goes back to, let's see, we didn't get that, and that. Yeah. So Friday, February 3rd, the data that we were supposed to get Friday, February 3rd, I believe we're going to get it on the 24th. Okay. This is what they are saying. Now, what's going to happen with the data that we're supposed to get the 24th? I'm not sure. I don't know how they're going to catch up with the data from the 3rd, the 10th, and the 17th. I have no idea. But the last I read is this Friday, we're supposed to get data from the 3rd. And so when we do get that data, I will be taking a look at it. I will be looking at what it is that they're doing with gold and the dollar and so forth. Okay. But what we can see is, you know, we know that retail traders are mostly wrong with their decision making. And what we can see is that recently they're somewhat bearish on gold, okay? And in terms of the euro, they're long, okay? They're long the euro. So long the euro means that they're short the dollar, okay? Short the dollar. And if you take a look at the dollar, there's been bullish pressure lately, okay? So if they're short the dollar, it makes me think that, likely the dollar is going to rally. And it would make sense because, like I'm saying, we're expecting gold to drop a little bit more, okay? But we'll get that information this coming Friday, and then I'll do a whole review of the data and what's taking place, okay? All right, oil. So oil, we have oil sitting inside an institutional buying area, and it's been sitting inside here for quite some time. Now, remember what I was saying. Trends are very important. We don't have any trends here, okay? That's a problem. There's no upward trend happening right now on the oil monthly chart. I would like there to be a trend so that I would know what direction price is likely going to head in and with how much momentum, but we don't have that going on. All right. But the fact that we have a buying zone in play leads me to suspect that we're going to be seeing oil prices head higher. So you think inflation is bad now? Ooh, wait until oil gets back up there to the 120s. Okay. So that's not going to be too good. All right. And so when we look at the energy sector, we've been looking at the energy sector for some time now. And what we can see is, this is not the one I'm supposed to use. It's supposed to be this one. There we go. That's better. So energy sector. Okay. You see what's happening here? Did you see how price hit that red area and then reversed? That's a selling area that we located. All right. We did institutional supply and demand analysis on the charts. We use the core concepts and principles that we teach here at the school to locate where the banks were selling and where they're buying. Because we know that if price is rallying and we hit a selling area, they're likely going to short or they're going to take profits on their long positions, depending on what they were doing to get price up there. Usually it's taking profits on long positions. Okay? And that's what we're seeing. When they flood the market with selling, it causes the market to drop, which is exactly why price is dropping. All right. So that's why we saw oil dropping from the highs. Okay. So there's bearish pressure right now. Okay. There's bearish pressure right now on the energy sector. But if buying starts to come back in, and right now you could see the only buying zones that we have are down here. 57. Okay, that's low. We had one on the daily chart here. It just got taken out. So what does that mean? A daily demand zone means that if it comes into play, we expect short-term momentum to the upside. That's what it means. But if it gets taken out, then that means that short-term momentum to the upside no longer exists. All right. So we have to watch for whether or not the banks want to come in with new buying. Because based on historical buying, the zones that I just pointed out, those zones are not until further down on the charts. Okay? So historical buying is until a lot further down the charts. So we need to wait to see if there's going to be new buying coming into the market. Okay? But if new buying starts to come into the market, then areas like this demand zone that now turns into a supply area, we need to see this area get taken out first. Okay? And if that gets taken out and price heads back up to this supply area that we have located on the chart, if that gets taken out, oh man, I'll be looking to buy the energy sector, that's for sure. Okay? That will be the signal that I'll be looking for. All right. So that's gold, oil. We looked at the energy sector. Now I want to take a look at the 4 stocks that I recently posted. Okay, these are 4 hot stocks I believe and are going to be good trades, potential trades for 2023. I think they have great potential. I gave the signals out on Twitter, so all you got to do is take a look at our Twitter channel and you'll see. The first one was Etsy. Okay, so the first thing we have to remember, first of all, okay, is the condition of the market and what's taking place. All right. We see a buying zone, okay, on the weekly chart. a buying zone. So there's a very good chance that we see bullish pressure coming into this market from this 4K level. And when we need to discover where price is going to go, what we do find is that there's a supply area here at 4.2K. Okay. So to move from 4,000 to 4.2 is high odds at this point. Now, if this area gets taken out, then we can see a push to the upside even higher. And when we look at the monthly chart, there isn't supply until 4.37, right up here. So bullish pressure, short, medium term is thumbs up right now, okay? All right. So with that being said, let's take a look at the first stock on the list, which was Etsy. Great company, did extremely well during lockdowns, okay? We saw a rally from $36 to $300. Okay, that's within 2 years. That was the investment of a lifetime, okay? If you got into it. Here's the buying area that came into play down here. $58 to $30. If price ever gets down to this area, that's a definite buy, okay? That's a significant buying zone. If price gets down to that area, I'm a long-term holder of Etsy, okay? So now you're wondering, well, why is Etsy dropping in price? Well, look what we contacted. A supply area, okay? This was a selling area. Because after the banks took price from $40 to $300, after the big investors rode this wave all the way up there, they needed to take profit. And that's what they did up here. They took profit, causing price to drop all the way down here. And then you see how they based price? They were basing price. You know what they were doing? They were offloading short positions, offloading long positions, sorry, okay? And increasing short positions. That's what they did to get price all the way down below 80s. Now they retrace it right back up to the selling area, and look, we're selling again, all right? So they're filling in their sell orders. So here's the deal. This is a monthly chart, okay? This is a lot of selling over a long period of time. So we got selling pressure coming into the markets right now. But here's the deal. We also have a buying zone, okay? And if price was going to head higher, they would use this area here. This is 122 to 112s. This is the latest buying area that came into the market before the shorting took place. So the question is, if the market is going to start heading higher short to medium term, we'd expect to see this area come into play and prices to start heading higher, okay? If this short to medium term buying on the markets, overall markets, turn into a longer term buying, this would be the launch pad for a much, much larger move to the upside. Okay? This is why I outlined this area and I said, watch for price to come in here and start building momentum to the upside. Okay? What does that momentum look like? Upward trends being built on lower time frames. Okay? So if you guys know what trends look like, I'm sure you guys know, then you watch for that type of structure to take place off of those areas, off of that area. And if it starts to build momentum to the upside, it could be a very good trade signal. Okay? All right. What's the next one? Oh, that's not it. Pins, sorry. Pins. Pinterest. I like Pinterest. You guys like Pinterest? A lot of people use Pinterest. Very popular, okay? Pinterest went from being a nothing burger at $20 going over $80, okay? That's incredible. And now we're back to exactly the spot that we were, okay? This is where the big move to the upside took place from. So I believe that this is a great spot for them to start purchasing again, because that is what we are seeing. This is the buying taking place from the lows here, okay? Up. But where did the buying take us right into? Okay, it took us right into a selling area that we had mapped out. Okay, and now we're seeing a push to the downside. So the signal is, I'm a buyer if the selling area gets taken out. It's as simple as that. I'm going to watch to see what the big players do. I'm not going to pay attention to anything else. I'm going to pay attention to see what are the big players doing. If they're shorting, I don't want to buy. But if they take out an area where they were shorting, then you know what that tells me? They're not interested in shorting anymore. They'd have to fill the market with so much buying in order to remove that shorting area. So I would be interested in buying. So that's the signal for Pinterest, is to wait for that to happen. Okay? Square. It's a good one as well. Now let's take a look at the multiple time frame analysis, because we have institutional buying taking place from down these lows. All here. Okay? This is big buying. Okay? Pushing price up. The last area where they had significant buying taking place is right here. Okay? That's between $72 and $67. As you can see, price is coming into that area as we speak. And this is at the same time that the SPY is coming into its short, medium-term buying area. So we know that this is a short and medium-term buying area. What we don't know for a fact is whether the banks are going to start buying here, okay? Whether the big investors are going to start buying block right now, okay? We don't know that. But if there is going to be a move to the upside, it would definitely take place from this area. That's why I said the signal to watch for is momentum building to the upside from this area. And that could be a very good long trade. All right. Last but not least, this is number 4, is Shopify. Big. They did well. Okay. Extremely well. Okay. During COVID, they went from 44 to 160 bucks. That was a great investment for those 2 years. Whoever rode that wave to the upside, they did extremely well. Okay. Now we have an area of selling that just came short of being contacted, depending on how you would draw that area. And we're seeing pressure to the downside. All right. Now, I'm not interested in this long term until this area gets taken out. Okay. So I'm watching to see if over time price comes up here. If it breaks past the 76 right here, this mark here, if it breaks past that area, I'm interested in going long this trade. Now I know what you're thinking. Why the hell would you want to buy something at 80 bucks when right now it's at 40 bucks? Well, listen, when we trade, you shouldn't be so focused on price. You should be focused on movement, okay? Whether things are going to move or not. You need to know and have proof whether something is going to happen. You could buy it at 40, and if it drops to 24, how much of a champ are you going to be? Not much of a champ at all right? So it comes up to 80, and you buy it at 80, the chances of it going to 100 are extremely high. The chances of it going to 120 are even, very high. There's nothing to stop it from going to back up to the 140s if it wanted to. But the only way I would know that it's going to go to 100 or 120 or 140 is if that $78 area gets taken out first. So that's why I wouldn't be buying it at these lows. I'd be waiting for that area to be taken out first. Okay? So keep an eye out for the Twitter page, because I'm going to be posting number 5 and 6 as we make our way through the top 10. Let's take a look. Your comments, I still can't believe there is no data from the CFTC. Yeah, I know. That's very strange. In all my years collecting CFTC data, I've never seen this happen before. It's the first, okay? Thanks for the likes. If you haven't hit the like button, hit the like button one more time. I will let you go there. The markets are just about to open. They just opened right now. We got the SPY. Yeah, sitting inside demand, so you know what's to be expected. And so just keep your eye on those markets and those stocks. And yeah, we'll tune in again very soon. All right, guys. Thanks for joining. I appreciate it. It was fun. And hit the like. We'll talk again. Have a good one. Take care, everybody.